This is The Wealth Puzzle with Michael Mansfield from the Lynn Group. When a part of your financial strategy is out of tune, your long-term goals, your retirement savings, and your legacy can all suffer. With many years of experience in the financial industry, Michael provides his clients and prospects with the information they need regarding Social Security, retirement income planning, wealth management, and much more. Listen in as we address your financial concerns and provide helpful solutions to put you on the path to achieving your retirement goals. And now, here is The Wealth Puzzle with Michael Mansfield.
Hey everybody, thanks for tuning in. It's Mike Mansfield with The Wealth Puzzle here at the Lynn Group. Happy New Year. I know it's been a few weeks since we made a video. Gosh, so much has happened in the economy, in the world of politics. It's been rather amazing to watch the economic data as it rolls out. Get in a time machine, go back a few weeks ago. We had a good jobs report, and that made the stock market pull back pretty dramatically because we're living in this moment where everybody is so hung up in 2025 on the interest of the Federal Reserve cutting interest rates that strong economic data certainly does not support that. So the market goes down when we get good news. You fast forward a week later, this is, 2 Fridays ago now, and we get a flatlined inflation read, and all of a sudden the market jumps back up. So, oh my gosh, the Feds can cut again. So we're living in this weird moment where we're so dependent on economic data relative to what the Federal Reserve is going to do. So that's going to be a big catalyst in the markets. Remember, we talked about this, in the end of December, is the Feds came out mid-December and basically said, hey, the labor market's kind of softening. Inflation is a little messy. It's not going away as we had hoped. We originally planned on doing 4 rate cuts this year. We're now only planning on doing 2. And so that's where the market's really been in this kind of plus and minus moment of trying to figure out what's going to happen with the Federal Reserve. So that's one piece of the puzzle. Separately, you had interest rates going up. Remember, the Fed started cutting in in September, good golly. And everybody thought, oh my gosh, interest rates are going to go down. Mortgages are going to get cheaper. Car loans are going to get cheaper. And all that happened was interest rates, in fact, went up. Let me put up a chart here, I guess. Why not show you a picture's worth 1,000 words? Wrong picture. Oh, we got to figure out how to use the computer correctly, huh? Let's see here. Here we go. So this is kind of hard to see, but where the bottom line of this chart is, right in the middle of it, where it V's down, this is where the Federal Reserve, let me see if I can kind of do this. Boop, boop. Let's make a circle. Let's scroll over. Let's go down. So this moment right here in September is right where the Fed started cutting interest rates. And so you can see right to the right of that circle, all of a sudden interest rates start to go back up. All the lines start moving up. So what happened? So the confusion of what happened is the United States year starts, U.S. deficit, starts in October. So it doesn't start in January like our year starts. It starts in October. So when you look at the chart right next to it, October begins, interest rates start to go straight up. So the Federal Reserve and the federal government starts spending a ton of money, way more than the projected deficit is supposed to be, practically double what they had estimated. And so think of it like a risk standpoint. So if you were going to loan someone money, maybe you'd look at me and you'd say, oh my gosh, Mike seems credible. I like Mike. I'm going to loan him some money. I'll give him a reasonable interest rate. But if you went and met a stranger, some guy in a dark alley, you would charge a higher interest rate because he seems more risky. Well, that's what's happening on the global scale, is because the government is spending so much money in their first quarter, which was October to December, they looked more risky. Our finances were looking messier. Our credit rating was looking riskier, and therefore it forces interest rates up to offset that risk. So since October, so this is October to December, we spent $700 billion over our revenue. That's over. That's the credit card in just the first quarter. Remember, we're only supposed to have a deficit projection this year of like 1.8 trillion. And in the first quarter, we spent 700 billion. This is insane. Insane. To even put that in perspective, you go back 1 year. So you can see this bottom line lower here. October 23 to December of 2023. The government spent 500 billion over. So we've already spent 200 billion more in the same time period from the previous year. That's a 40% increase. This is shocking and terrifying. The government just completely blew out the budget for the fourth quarter. They went on a big spending spree. So you had that happening. And then all of a sudden interest rates started to kind of soften halfway through November and then into December. And that bottom of that little V is where Powell came out and said, hey, inflation ain't going away. Labor market stinks. And it shot interest rates up because then the bond traders and interest rate traders were saying, oh my goodness, man, you promised us all these rate cuts, but the reality is you might need to raise rates. You certainly can't give us rate cuts if everything stinks. And so that's why we're so data dependent right now. Obviously, we've got a new president. That's really shaking things up. There's a lot of things going on there that are probably we'll save for a different conversation. I would say at the moment, as I had mentioned in December, what we're very curious about is what Congress actually does. So the big ticket item, the market has been trying to price in the idea of tax cuts, deregulation, energy bills, border security bills. All of these things are trying to get priced into the market. But until Congress sits down, creates this giant continuing resolution bill, and somehow gets everybody in line to vote for it because they have very tight congressional control, it's kind of yet to be seen. And so, we're suspicious that one way or another, the first quarter was going to be rather rocky. And that's just kind of what we're experiencing. But then you get to yesterday. So the market just really bloodbath yesterday, right? The market goes down. Actually, the Dow went up, but the NASDAQ and the S&P went down pretty dramatically. And the big ticket item on all of that, and it's kind of hard to see here. Let me see if I can annotate again. This is the NVIDIA chart. So it's kind of hard to see right here, but NVIDIA cratered yesterday, down 17%, something like $500 billion lost in one day. So what happened? So all of a sudden, out of nowhere, over the weekend, comes this mystical monster from China called DeepSeek. This is a new version of artificial intelligence that would challenge US artificial intelligence. It's kind of interesting for a number of reasons. One is it was very quietly launched. It came out very quickly. But remember, the United States has very actively been trying to not let China get super processors, super microchips, which then implies that China did this without all the fancy chips that NVIDIA makes, without the technology that Broadcom provides. And that's why all of those stocks got cratered yesterday, because did China come up with something that is way, 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 way cheaper and more efficient than US technology? So OpenAI, which owns ChatGPT, has raised something, I don't know, like $16 billion in order to build and start putting together their AI systems. So there's a lot of work that's gone into that. China is saying that with DeepSeek, they only spent $5 million to create what they think is a more efficient version of ChatGPT. So this is a huge disruptor at the moment, hence why we had this big pullback in all these big tech names yesterday. Now, the problem is a number of things. Thing one is this just noise or is this real? We don't even know yet what China really spent on it. We don't even know how they really built it. We don't know what all the systems and management are behind the scenes, or if this is just a publicity stunt of sorts, and it was much more expensive and much more robust than they're implying, and it's really not that big of a deal. The other thing that becomes very interesting is we could also relate this to the TikTok conversation, right? Guess what? Your government doesn't care about social media. They don't care that you're on social media. They're not concerned about all the stupid things you continue to consume on social media. That's your business. What they're concerned about is how all of that data ends up in the pockets of China. Are they using facial recognition software to track where all the US citizens are? Are they scraping all your personal data? What are they up to with their algorithms and the behind the scenes works of it? And so that's where the conversation of TikTok possibly being banned, certainly being bought by a US company that can control their algorithms. As of yesterday, I was reading that Microsoft is in talks in that process. But honestly, that's kind of like a drop in the bucket when you compare it to this DeepSeek thing. Remember, this is this DeepSeek is controlled by the Chinese Communist Party. They're the ones that are putting the data points and the information that the AI is working off of. Plus, they're also scraping all that data. So this appears to suddenly be a much bigger version and issue to the government, possibly as TikTok. So, yeah, I mean, here you can kind of see on CBC, DeepSeek test limits of American trade restrictions. So we're going to get kind of back to this same issue that we've been having with TikTok. With the DeepSeek. So very interesting. Obviously, it roiled the markets. If we've learned anything about the stock market, it tends to be very emotional in the moment. So it got very hyperbolic. It crashed yesterday on some of these big tech names, and they're stabilizing today. And we're going to see what happens. If all of a sudden the data on DeepSeek comes out and it was more expensive than they thought, or they were secretly stealing NVIDIA chips to make it, or whatever the deal was, then all of a sudden the fear tactic that's being used to stress us out in the US might diminish pretty quickly. But either way, we're watching it. It was certainly quite the wild turn of events. The AI market, the AI trade is still huge. It is still robust because what NVIDIA does, what Broadcom does, what Microsoft does, Palo Alto, all of these technology companies that support the AI structure, it's not just about AI. It's about the efficiency of supercomputing and how we can use technology to obviously advance the world. So AI is just one piece of that puzzle. So I think that there's a lot more, we'll say, undue pressure put on these stocks yesterday than is necessary. We own these stocks in some of our portfolios, and we happily own them and are likely looking at purchasing more of them as they go through a down cycle. So anyways, if you guys got any questions, thoughts, concerns about DeepSeek, about politics, about all that fun stuff, obviously that's why we're here. So you can reach out to us at the office, 805-500-7035. You can visit our main website, thelindgroup.com. Otherwise, Happy New Year. There's going to be a lot to talk about this year. Like I said, I'm very excited to see what Congress does and what they come up with. I imagine we can expect some fireworks and some surprises, but one way or another, looking forward to what might be. So anyways, I hope everyone has the great rest of their week, and I'll talk to you soon.